We've got Amnish Aggarwal also joining us on the phone line this morning. Amnish, let me get your clear takeaways now that you've had the weekend to do the math on the deal. What are some of the key takeaways for you?
Okay, you see, from the Reliance angle, their top line in your fashion business, it literally doubles from where they are currently. Secondly, their top line in food and grocery gets a big, you can say, upside of around, say, 40-odd%. And more importantly, you get around 17 million square feet of retail space, lot of good locations in the various malls of the country, and a very good backend which was set up by Future Supply Chain Solutions. Now, it is for the Reliance that how well they can integrate it with and take forward their JioMart business, because they are having very strong IT infrastructure and telecom in place, and they actually needed, you can say, the stores on the ground and infrastructures to scale that up significantly. So from that angle, I think it makes much easier for Reliance to scale up their overall retail business.
Absolutely. What's the market going to be excited about the most, Amnish? I mean, to some extent, there was already an expectation of the deal coming through. Now that, however, we have that closure coming in, how much more of a boost do you think this could give the stock in the near term?
Well, you see, in the near term, definitely it is positive. Okay. But a lot depends upon how well they manage the business, because I also don't rule out some sort of a store restructuring as we go along. Secondly, now on one hand you have got the valuations at which, say, Reliance has purchased, say, which you can say roughly 1 times EV to sales on FY20 numbers, and on one hand you have got DMart, which is currently trading at 3.5x on FY23 EV to sales. So Reliance can catch up in terms of valuations, and I think market is already factoring in much higher valuations than what they have paid for future retail. So I think in the near to medium term, Reliance Retail it's a positive for them. We have increased our target on Reliance Retail. But having said that, a lot will depend upon how they integrate the business and scale it up going forward. So to that extent, Reliance is a long-term positive, and I don't see any much gains except, you can see the trading gains coming for the future group shareholders.
Arvind Singhal also joins us, represents KSO Technopak. He understands the retail business much more than anyone else in India. Arvind, good morning. Thank you for joining us. I'm interacting with you after a while, so hope all is well and safe at your end.
Thank you very much, and I hope the same for you too.
Well, thank you very much. Arvind, my question is that if you have to, let's say, analyze the future group of companies, and let's keep for a minute their capital allocation challenges and their debt problems, do you think independently are these good businesses, and has Reliance managed to buy gold at the price of silver?
So you have to think of it like a piece of a puzzle where Reliance Retail is operating into multiple formats, multiple geographies. By itself, future retail was under a lot of stress, as you know, and the business had some very good performing assets like FBB, some not so good performing assets. The combination with Reliance actually makes for Reliance Retail, this retail puzzle as such much more complete. So in that sense, it is a classic situation of 1 + 1 adding up to 3, if not 11 in the long term there. So that's the way I see it beneficial for Reliance Retail, of course.
Arvind, let's understand what it really means for the organized retail sector. Why? Because now Reliance will have 15% market share in the grocery business. They will have a formidable presence in tier 1, tier 2, even metro cities. They will have strategic advantage of getting on-ground presence, which the future group in a sense has built in the last 20 years. So that's the physical presence. On the other side, they are taking JioMart, which is more like a digital adaptation, very, very clearly out. So don't you think both these businesses could cannibalize each other?
Not really. I think as far as the JioMart part of the business, see, let's first keep into perspective what is the size of the retail market in India overall. And then the gap between what JioMart is trying to address, trying to integrate the unorganized sector, so to say, and the organized retail. We are looking at about $800 billion of retail market before COVID, of which the modern retail, including e-commerce, is just about $100 billion. So there is $700+ billion of business being done through traditional retail or conventional retail. JioMart can take a share of that business as well. So we are not talking about cannibalizing the classic brick and mortar modern retail business of Reliance Retail with the JioMart platform. Yes, there would be a certain amount of a cannibalization, if any, when the AGO or you're looking into pure play e-commerce is concerned, where some of the customers may be the same customers. So there is no cannibalization as such in the near future from JioMart as well as the physical retail formats of Reliance and Future put together. The second part you mentioned about what does it mean for the organized retail in India, I think it is a question which, this kind of a dominance at times is a cause of our concern perhaps in times to come. My recommendation for many years has been very clear that India needs no restrictions on foreign direct investment in retail, because Indian retailers do require access to global capital and global know-how. Hopefully, the government may want to do a rethink on this so that we should have many more retailers of a certain scale in the market. Otherwise, the gap is too much now.
Absolutely good point. Arvind, thanks so much for joining us this morning. Sandeep Sabharwal also with us. Sandeep, let me take forward that point. We're now going to have one very significant player when it comes to the retail space post the RIL Future deal, which was anticipated but done and dusted now. And we're just trying to understand the implications on the retail landscape.
Yeah, so obviously, I was listening to the discussions which happened previously. So I guess most of the aspects have got covered. My points on these will be that, one, the deal was expected, and to that extent, it doesn't come as a surprise. So from a short-term perspective, from Reliance point of view, it won't add too much to the stock because market sentiments are buoyant, plus minus a few rupees here or there could happen. Now, the key point for Reliance will be to restructure and make these assets profitable, because the issue with the Future Group was a lot of expansion without focusing on profits, so profitability. So I think Reliance will have to have a hard look at all the stores which have been acquired, which need to continue, which need to shut down. But obviously, it gets a lot of cost benefits, synergies of interest costs. Obviously, for the overall business was very high for the Future Group because they were not able to service. So I think that aspect gets removed. On the acquisition cost, it's cheaper than the value at which Reliance Retail trades so it's not a listed company. The value at which what is ascribed, it's at a cheaper valuation. So to that extent, it's value accretive. So overall, a net from Reliance perspective, it's a positive. Obviously, since it's a all cash sort of acquisition. So if it had involved some stock and all, maybe it could have been better. But I guess because of the debt repayment obligations, it had to be all cash, because at the valuation at which the Reliance stock trades, if it was some equity swap also, it could have been better for Reliance. But then overall, it's a positive for them.